Hello, my name is Steve Bigelow with the Candlestick Forum. We still have a very good trading market in the sense that the Dow continues to trade lower ever since it closed back below the T line, and the NASDAQ continues to trade higher after it did the J-hook pattern off the 50-day moving average and then doing another J-hook pattern today, pretty much indicating that they're not going to close it below the T-line. The uptrend remains in progress. This makes for the strong patterns to continue to work very nicely. Last week, we identified AVXL as a fry pan bottom breakout. It is still working in the right direction. Today, we identified ENTX, started buying this one on the breakout. You can see the fry pan bottom. You can see the J-hook pattern. You can see the little kicker type gap up off the T line to take it out through this level. When you see a breakout, what that usually indicates is the investor sentiment has been building up, and this is where they start coming in aggressively. And this is exactly where you want to be identifying these strong breakout patterns, because it's usually going to imply there's a lot more upside. We're looking for a bobble breakout in F-SLY. So last week we were looking for this, or a few days ago we were looking for this breakout. It hasn't occurred yet. Doesn't mean it's not going to. We're still watching after a few more days the fact that you have a T-line crunch. Notice how when they back it off at the 50, they still couldn't close it below the T-line. You can buy this on positive trading because basically a bobble breakout is a much more defined J-hook pattern because everybody else is watching to see what's happening here at the 50. We did that on a recommendation today on PCT. You can see the bobble breakout. Again, a J-hook pattern much more defined. You can see where the resistance level is, and now you can see the J-hook pattern is telling you that everybody that was watching the 50-day moving average is now not concerned as it being a resistance level anymore. That starts you wave 3 of the J-hook pattern. The patterns in candlestick analysis just gives you a much higher degree of probability that not only are you going to be in the right trade at the right time, but the magnitude of that trade is usually going to be excessive. Same scenario on the short side. We shorted LPX last week because of the bearish engulfing, the bearish double doji, staying below the T line, failing at the 50. It's still in this downward progression. And today we shorted TAL. You can see the bearish J-hook pattern failing right here at the T line with a gap down, telling you this downtrend is still in progress. So this is not rocket science. This is merely identifying which sectors, which stocks are acting the strongest, which sectors and which stocks are acting the weakest. And when the market's kind of in a divergence like it is right now, that is where you can have both long and short positions in the portfolio. So join us June 26th, a Saturday. We did a mini series or a mini spotlight training on identifying the breakouts. On the 26th, we're going to go into much deeper analysis of when those breakouts are about ready to occur, how to identify the exact time to get into them, and then knowing what other indicators we use to stay in that strong price move until it's time to close out the position. So right now, you want to be both long and short, as long as we know the NASDAQ is trading higher and the Dow stock related stocks are trading lower. That'll be it. We'll see you in the chat rooms.